Good afternoon. Your market news now. Asian stocks headed for a fifth week of declines following more weakness in U.S. equities. Mainland Chinese equities also slumped with data for industrial production and retail sales that beat expectations had little impact and actually provided more of a downbeat sentiment when it comes to those markets. However, European side as well, we're starting to see that dip as investors brace for a U.S. rate hike, while warnings from the World Bank and the International Monetary Fund have feigned fears of a slowdown. The World Bank's chief economist saying that he was worried about a period of low growth and high inflation in the global economy. The IMF said downside risks continue to dominate the global economic outlook, but it is too early to say if there would be a widespread global recession. However, to look back at the week that was and also unpack some of the key themes and also talk about when it comes to those aggressive rate hikes that we can expect both from the BOE and the Fed, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. Before we get into all of that, I mean, let's take some stock when it comes to the JSE performance today, and especially if you had to look back at the week. I mean, you're looking at a third day of declines.
Yeah, absolutely. I mean, look, we basically suffered along with the rest of the world in terms of market falls. And I think what's also quite important to note is that usually when the rand is weak, it tends to give a little bit of a shock absorption to our market. Well, that certainly didn't happen. I think part of that relates to the fact that our rand is weak along with weak commodities, and that tends to sort of take away some of the buffering effect. So I'm afraid we all fall down along with everyone else. I think it's going to take a little bit of time to see all of this negativity work its way through.
So, I mean, you look at the gold price performance. I mean, if you had to school us here, let's call it economics 101, or suppose call it commodity trading 101, why are we seeing a gold price that's below $1,700?
Okay, so, I mean, basically, because gold is a real asset with a long-standing history, it tends to be the kind of asset that normally tends to give some very good cushioning against inflation. So if inflation went up 5%, you would normally expect gold to go up 5% to match that level of inflation. Now, what happens is that when global economies look very weak, the expectation is that really there is not enough demand to actually allow that kind of relationship to hold true. So what we're seeing at the moment, despite the fact that there's lots of inflation there, gold is actually weakened. And that is obviously because of the very real concern of weakening economies starting to come through. And of course, a lack of ability for consumers to maintain any kind of demand while things are so weak.
I can imagine there are many key themes that stood out for you when you look back at the week that was, but if you had to hone in on just one, which one is it?
Well, I'd kind of make it almost a composite. You know, this US inflation, well, it's got consequences. I keep an eye on the Atlanta Fed's GDP now. In the last 2 weeks, it's fallen from 2% projected GDP in the US to 0.5%. That's an extremely large fall. And when I look at the components that make up that, it's a mix of residential investment, private inventories, and consumer spending, otherwise known as PCE. And when you throw all of those together, those are numbers that indicate that interest rate hikes in the US are already starting to bite. Even though interest rates are far from real, i.e. ahead of inflation, they're behind inflation, but clearly they are biting. And I suppose there's a question there of, well, is there going to be a recession anyway, or is it central banks that are going to trigger that recession and markets are trying to anticipate that? But either way, it makes for a little bit of a somber outlook on things.
So the Fed's September meeting, it's almost, I would say, the bets are in that 75 basis points. Can we then say that perhaps we might be going the same way in the November meeting, given how high inflation has come in?
Okay, so I think in terms of the rest of the year, I mean, a lot of it basically relates to base effects, and a very, very big part of that is energy. So to give you an example, I mean, at the moment, the energy component of GDP or cost to GDP, particularly in Europe, is 11.5%, whereas a couple of years ago, let's say the last 5 years, it would have ranged anywhere between 2 and 4. So that is an extremely sharp increase in the impact of this cost input into that European economy. No wonder everyone is feeling so gloomy there. The US looks a little bit better. Their cost input is about 2% normally. It's climbed to about 5.5%. They're in a slightly better position because they're energy exporters. But the key point is that both of them look like they're under pressure from energy. And in terms of it actually rolling over and interest rates basically letting consumers get out of jail, that's only going to happen at the end of the year, I'm afraid.
Speaking of people who are gloomy, just a quick one before I let you go. You're looking at the UK Public Satisfaction Survey showing that a third of people in the UK are unhappy with the way the Bank of England has been dealing with inflation. How important is the BOE's, rate decision next week?
Well, it's pretty important. The one thing I'll say about the BOE is that unlike other central banks, they haven't been mealy-mouthed about it. They've quite simply said that a deep recession is going to be part of any effort to properly squish inflation. So from that point of view, they've already conditioned UK consumers to expect rate hikes there. So I can't see anything else happening there.
Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Securities giving us his perspective on the markets. Of course, we'll be back from a market coverage perspective on Tuesday. Of course, on Monday, we'll be giving you that full coverage of Queen Elizabeth's burial. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you.